Good morning, traders. This is our weekly market analyses and past week's performance review of our live trading room for March the 13th, 2023. All right, let's get into this. It was an interesting week to say the least. We started off last week with Monday, Tuesday, even Wednesday, fairly normal trading days for us. We'd had a lot of success. And Wednesday, late Wednesday, definitely into Thursday, started to get a little tricky to be able to get our fills. It just sort of seemed like we've been in this sort of consolidation zone for a while. And we started talking in the trading room about what's the next catalyst going to be. There's always got to be some kind of a catalyst. Usually it's news-driven events that push us out of a consolidation zone and get us trending again with a bullish or bearish bias. And of course, you never really know what they're going to be, but we started to get one Thursday, and then it really accelerated on Friday. It accelerated even more over the weekend here as we got news that a second bank was in failure. And, we start our trading week in the live trading room on Sunday evenings. We start our Theta Ferry trades. We don't do our Theta Ferry trades. Very popular trade, by the way, on Fridays because we don't feel we get compensated for the weekend risk. Certainly would not have been the case this past weekend. I think that's a wise choice to make. But we do start it on Sunday evenings for a Monday expiration. So we started and have already booked, by the way, our profit on last night's Theta Ferry. Massive, massive gain on that one. The biggest gain that we have had year to date on our Theta Ferry. And in fact, we've doubled up on it. We actually put it back on here this morning. So we've got one that's working right now, trying to work its way to a $100 profit. It's up 14 bucks right now. But anyway, very, very interesting week. We finally got some news catalysts kicking some things off that we, as well as many other people, have been talking about, which is sort of recessionary fears and how that would potentially manifest itself. So let's get into it. Let's talk a little bit about what we are seeing in the marketplace. Again, in our live trading room, we looked at these 12 composite tickers, or rather technical indicators, and these dual overlay of moving averages, both simple and exponential, all the way from 5 days out to 200 days. We look at pivot points. We try to find support resistance areas based on pivot points. We do that on a daily basis inside of our trading room. But for this purpose, we pull back a little bit, get a little bit more of that 30,000 foot view, see what the weekly numbers look like. And it definitely is pretty much a sell signal all across the board. So when you get sort of universal confirmation from all of the major indices, all of your major technical indicators, especially the 200-day moving average. We are still clinging, just barely clinging here to the 200 period moving average on a weekly basis. On a daily basis, of course, we have broke that. And this is really the last vestige of any type of support that the market's holding on to right now, but everything else looks very, very bearish across the board. We look at some of the indicators. I'll give you some of the numbers that we're looking at here in the trading room and some key points, I guess, that we're looking at when you look at the overall support resistance of the marketplace. Of course, again, you can see that almost all of the indicators here are pointing down. They're giving us sell signals. But maybe more importantly, we've broken down below that 200-day moving average. We're also below the point of control and VWAP. That's not positive. And we are quickly approaching what I have called for Well, my goodness, it started right back in here. This was back in the summer of last year, June or so of last year, what I call the cliff. The cliff is a 38.40 on the E-minis. And that's been a huge demarcation point. It's been a huge lately area of support in the marketplace, as you can see going back here to October of last year and then December of last year. We're back at it once again. Could this be potentially a triple bottom and we get back to our bullish nature, or do we lose the cliff? My feeling is if we lose the cliff, we've got a whole lot more downside than what we saw in October of last year. So again, everything that we're looking at pretty much across the board looks bearish in nature, but we're coming to a big demarcation point. That cliff, as I call it, that 38.40 level, that's one number that I would keep on your watch list for sure as you go forward with your trading over this week. If we pull in a little bit closer here and we look at the 2-hour candles, which is what we generally base our start to each day with, I'll give you some numbers here on the 2-hour chart, and you can see if these match up with your support resistance levels. For support to the upside, so this would be, I guess you would say this would be support. Here we go. Okay, let's get my pen working here. So support to the upside, 39.04, big number. This is a big one. This would be a big key one right here. As we sit right now, we're sitting at about 38.70. So we got to get up above that 39.04 number before anything else happens with regards to a bullish bias today. Above 39.04, I'm looking at 39.17, 39.38, and then 39.58. So those would be some of the key areas for the bulls to look at today. It's been a little bit all over the map here with futures. We got news late last night in the futures markets, obviously, that the Fed was going to backstop the banks. Not a big surprise there, but the algos took over. We pushed almost up 60 points on the E-minis. Gave most of that back when the UK opened up. And we've just been sort of vacillating here for the last couple of hours. Currently sitting to the positive, NASDAQ is up huge, up 107 points right now, with the E-minis just sitting up about 5 points. We've been up, we've been down, but it will be interesting. And I do think getting above that 3,900, but really 39.04 level for the bulls today is going to be just absolutely critical. From the resistance standpoint, and again, that's obviously starting Thursday through today. That's been the bias is to the downside here. 38.80 would be my first level. 38.65 would be my second. 38.49 and then 38.40. That's the cliff right there. That's the cliff. 38.40. Below that, guys, my opinion, it is lookout below. It is lookout below. So those are some of the areas that I'm looking at as we go forward. Again, we trade in a disparate manner with various strategies. All of the major indices. We trade the SPYs and the Qs, we trade the IWM, and we trade the DIAs. Again, all with different strategies and setups to give us a little bit of more broad diversification. But one of the things that you see as you look at all of them together here, again, the red lines are the 200-day moving averages. And we're below that 200-day moving average on all of them. We talked about this before. There's 240 plus technical indicators. There's all kinds of things, of course, that you can throw on a chart to give you quote-unquote buy-sell signals. Some of them have greater accuracy than others. I'll tell you what, there's nothing in my mind that is as big as the 200-day moving average. big line in the sand, big demarcation point. Really, really hard for the market to get below it, really hard for it to get above it. But once it does, it is sort of a releasing of the shackles, if you will, and the market is a lot freer to run in that direction. So we'll just have to see if we get a retrace, a retest here. You know, if you've seen over time, I think maybe the IWM is just as good an example of anything. It really can, in most cases, act as a consolidation zone, or it can test it multiple times. So just the fact that we're below it now doesn't mean that we're just, you know, the elevator is straight down at this point. But it will be interesting to see over the next 3 days how this sort of develops, and if we can get a substantive bounce, or if it is just going to continue pushing lower and lower. It is interesting, and I think it makes note of the importance of actively managing your portfolio. I had a lot of people in January when the S&P was up 8-9% and the NASDAQ was pushing 18% returns in 1 month. Say things like, well, you know, I'm pretty happy with my 401k. I'm happy with my IRA. I'm happy with my mutual funds. I'm happy with my broker. You weren't really happy with that. What you were happy with was 9%, or in this case, 18% returns. But it was all passive in nature, and what a passive strategy giveth, it taketh away. We're not quite back to a break even, although the Dow is down now. The Dow's back down on a year-to-date basis. We're not quite back to break even on the S&P yet. We're getting pretty close. We're getting really, really close on that. By the way, we're doing about 1,000% better. We're doing 10 times better than that in our ATM program. We're up about 10% right now in our ATM program. That's our asset allocation model. Asymmetric trade management is what that stands for. I'll talk about that a little bit later here in our performance review. We look at the sectors, and boy, it's not too big of a shock, is it, that it's the financials that are getting beat up the most? And of course, that spills over into a lot of the other areas. It definitely is going to spill over into housing, for example. It also, if we are looking to push into a recession, things like energy can get hit. So pretty much everything, obviously, across the board was getting hit. But financials are the ones that took it on the chin last week. And the ETF that I like the best that tracks the financials is XLF. And I'll tell you what, if XLF gets down to a price target for me of about $30 a share, that would be a buy for me in our ATM program, our asymmetric trade management passive portfolio. You've got about a 2% dividend. You got about a 2% dividend on this particular ETF per year. You can bring in almost 1.5% on a covered call trade. That'd be about 18% a year. You could set this trade up for about 20% potential, keyword being potential, cash flow, and then any appreciation on top of that. I would like that setup. That's one of the things that is on our watch list as we go forward here. Moving on, let's take a look at the heat map. This is from 2 weeks ago. How different a week can make in the marketplace. But 2 weeks ago, pretty much green across the board. This past week, and again, really starting on Thursday, accelerating through Friday, you see there is just a lot of red all across the board. Not a lot of strength in any big area, any one area in the marketplace. We look at the index performances, and again, I think this tells the story of why it is so important to trade all of these indices and not just one or two. They do diverge. They do have quite a bit of diversification that they can offer us. So again, you see this was 2 weeks ago. This is where we were at last week. A lot of ugliness going on in the Russell. The Russell has about 20 to 28% of its whole index in sort of the banking sector, smaller regional banks. Of course, those are getting financials getting hit very, very hard over this last week. It's been one of the few times that we have needed to roll our IWM credit strangle trade because the move was so large. But I think it also is a testament to how awesome that trade is, that you can have the position move against you by 8% in a few days. Still fixable, still rollable. We look at the put-call ratio. Again, when the put-call ratio is above 1, that's when put volume is exceeding call volume. When it's below 1, that means call volume is exceeding put volume. So it's just a way to gauge market sentiment and give us ideas of whether or not the market looks bullish or bearish. We are very bearish right now. When you get below 0.9 on any of the major indices, that's pretty bearish. And we are absolutely bearish here on the NASDAQ and the NYSE. So again, that's not really a surprise based on the price action that we have seen in the marketplace. We look at open interest levels. We look at sort of what we would call gamma walls. We look at areas that could be potential catalysts or sort of demarcation points for the market as it ebbs and flows and moves up and down. And again, this is not a surprise that this 4,000 level on the E-mini on the SPX 4,000 level on the SPX is a big one, and so is the 3,900 level. So again, we're sitting at some pretty big demarcation points here as we go forward. Expected moves. Last week's expected move was 78 points. Felt like we were going to get that in one day on Thursday and Friday. And this week's move, I guess the good news is that it's back where we need it to be. This is a perfect IV for us. Anything above 110 expected moves, a point move in the SPX on a weekly basis for us gives us the premium that we need to build the very best trades that we can within the framework of the strategies that we use. Doesn't certainly guarantee us a profit per se, but it gives us the best opportunity for that. So I would continue, again, to think that this number is a little low. I think that we're probably going to get a bigger move than 115 points this week, but I love the IV that it's bringing. So very flummoxed and disappointed with last week's volume, with last week's price action and premium pricing that we were getting. Pretty excited for this week as we go forward. We look at the fear greed as sentiment reading, and again, this is just a contrarian indicator. It looks at all of these items here, and it tells us, based on that, is there a lot of greed going on in the marketplace or a lot of fear? And again, it's a contrarian indicator, meaning that when blood runs in the streets, you should be buying. And when everybody and their dog is making money like crazy in the market, buying any meme stock that comes along, you should be selling. So this is a sort of first test for you and I as traders to see if you really buy into contrarian indicators. We're back. We are back. We've been up in the greed area, and not really extreme greed, but we've been pegging up in here in the greed area for quite a while. Hey, we're back now to extreme fear levels, and that has generally been the time to start looking to buy. We do have a long, what we call anchor position in our passive investing program, the ATM program, the asymmetric trade management system. based primarily on this right here. So we'll see how that goes as we go forward. Volume still not really that exciting. Not that exciting. I would like to see a little bit more volume coming into the market. Key news items for the week. Today we do have the New York Fed inflation expectation numbers coming out. Tomorrow we've got CPI. That's going to be a big one. Fed Bowman is going to be speaking. Wednesday we have sales numbers, retail sales. We got PPI as well. Oil inventory numbers will be out on Wednesday. That's a big one for us because we do trade oil every single week in our trading room. Thursday we have jobless claims and housing starts, as well as nat gas. We have been itching to get back into a nat gas trade. In fact, that's something that we're going to talk quite a bit about today in our live trading room. Where's the entry point for this trade? Premium and potential return is there. We just need to find the right entry point. Friday, we've got industrial production and the University of Michigan sentiment reading. So we do have some potential news catalysts here over the next week. We look at our updated, our updated performance results from last week, year to date. And on our 0DTE, we have now had 49 days of total opportunities for us to trade that strategy. 70 total trades taken. I think that is the biggest volume start in all the years of this trading room that we've ever had. It's almost sort of become a perfunctory default in the trading room. When we have a day that we only do 1 0DTE, everybody's like, what's going on? How come we're not double dipping? But we've had some nice opportunities this year. So of 49 days, we've done 70 total trades, 68 winners, 2 losers. It's pretty darn good, guys. I will humbly say that I feel like this is a pretty darn good program, pretty darn good way to trade 0DTEs. I don't know that there's anybody else out there putting up not just the win rates. Who cares really about that? It's the dollar amount, isn't it? At the end of the day, it's how much money you're making. You've got to be able to put $100 to $1,000 a day in your pocket, or have the opportunity, a realistic opportunity of putting $100 to $1,000 a day in your pocket. If not, man, go get a job. Work in the drive-up window at McDonald's. There's better ways to make money than battling the market all day long for just $50, $100. It just doesn't make sense to me. All these people out there trading 0DTEs with butterflies. What's the point? Our 4DTE SPY and Q trades. Let's see. I believe it is the first week of the year that we've rolled both of our SPYs and our Qs. And this is something we're going to talk about today in our live trading room. We were in a nice profit. Well, I wouldn't say nice. I would say profit zone. We were in a decent profit zone on both of these setups. On Thursday, we didn't take it off. And now we go to Friday, we needed to roll them. So they look really good for this morning. They both look right now like they should expire fully profitable for us. We rolled them to today. But we want to talk in our trading room today about when a trade is in the profit zone, but maybe not to the extent that you would hope or desire. How do you make that decision on whether or not to pull your profits or let it run? But anyway, we'll see how those go. So far, so good with our 4DTE trades. The same goes for our IWM Millionaire Maker trade. We've had 10 trading opportunities. We've done 14 trades. 13 of them have finished as winners. We rolled last week's IWM. So we'll take a look at that here as it goes forward. But that looks pretty good as well. We are able to add substantial amounts of credit to that trade. So if we can hit this roll, we go from somewhere like 1.3, 1.35% return for the week to close to 9%. So we'll see how that goes, obviously, this week, and update you next week with next week's performance results. Our pairs trades, we added one more pairs trade but we haven't booked any profits yet on the 2 that were open. So now we have 3 working pairs trades. One of our pairs trades is close to a 7% return today. We might be pulling that one today. But so far, so good on those. Those have been amazing. We went all year last year with our pairs trades, not having a single losing pairs trade. And most of them were between 2 and 10% returns on those trades. We had 2 that were like 1.1, 1.2%. But other than that, they've been amazing trades for us. We didn't add any more bear market strategies to us this year, although we do have a short model portfolio. And that has just been amazing. We'll get into that in a second. Our stock millionaire maker trade, we're working right now Netflix, NFLX, and we're working PayPal, PYPL. We did PayPal just solely last year. Never had a losing trade in that particular setup with that particular underlying. Knock on wood, we haven't had any losses in this so far this year as well. Our position in Netflix is a lot tougher to manage than the PayPal trade. Also has about 300% more potential return. So it goes hand in hand. Our positive Vega DIA ladders, we had another one expire, fully profitable for us last week. So that puts us at 10 total trades, 10 total winners. These trades come in after fees and commissions and buying the positive Vega protection portion of these trades. They come in at targeting about 9% a month is the income goal. That would be the goal on these. And so far, so good. We have had some tremendous success with that trade. All of our ladder trades are very flexible. Scalping last week was phenomenal. We absolutely crushed it on Tuesday. We stopped almost before the halfway point in the day, really. We stopped very early in the day. We hit our target of, we're shooting for $500 to $1,000 a day in our live scalping room. And so when I hit $1,000, usually that's the signal, hey, we're done. We're done for the day. So we hit a great result on Tuesday. Thursday, I had to head out early for one of my dirt bike races that I did in Lake Havasu. And so I hit the minimum goal of $500, shut it down, hit the road. Great scalping week. If you want to come scalp with us on Tuesdays and Thursdays, man, I think you should check it out. It's a lot of fun. We have a lot of fun with that. Dragonflies, we're still working our BA trade. Just taking a look at that right now. Our BA trade expires this Friday, 4 days to go. Put up $3,000 in that trade, brought in $400 in income. That has been a phenomenal trade for us this year. Not without its challenges, but boy, the return on it has just been phenomenal. We'll probably quadruple dip on that again after Friday's expiration. We've had 2 really successful goes at it. We're in our 3rd right now. It looks really solid going into expiration this Friday. And so we'll probably just keep working that trade over and over again. The Theta Fairy trade, what an awesome trade. What a fantastic trade. Who wouldn't like to be a part of a trading system or program that can have a realistic shot? Again, no guarantees in the marketplace, but have a realistic shot of putting 20 grand a year into your pocket before you ever wake up to go out and start trading. That's basically what our Theta Fairy did for us last year. That's what it's doing for us this year. We bring in a target goal of $100 a day. Today, we brought in $150. It was an amazing set. It's our biggest winner. And I purposely went in and told everybody, hey, we're going to push this a little bit today because the setup was fantastic. Our gold ladders, we have not had a single losing gold ladder ever since the inception of the program with gold. We've also not taken very many of them all the way to expiration. So we're not capturing, we're very profitable in it, obviously, with no losers, but we're not capturing enough of the profit potential of the trade to get to our target goal, which is 1.5% return a week. 6% a month, about 70% a year. We're well shy of that goal, but we are profitable and we're making money. So I guess that's a first step in the right direction. Our overnight vampire trade, we're 1 for 1 right now, and we'll have another one of those coming up here soon. Our oil ladders, again, all of our ladder trades, oil has the biggest potential ROI. Oil, starting Thursday of last week, has been getting beaten up quite a bit here. So we'll probably be working on our oil trade throughout this week to readjust some of those ladders. But so far, so good on the oil trade. Our in-the-money cover trades, we're up to 5 total trades right now, with 5 of those being winners. We have not gotten all 5 of those into step 3, which is where we sell the option, get assigned, write the cover. But they've all been profitable for us so far. We are working a couple that are all the way into step 3 right now. One of them being coin, one of them being Tesla. And both of those underlines, both of those equities got hit pretty hard last week. It's pretty nice. It's pretty comforting, helps you sleep at night when you got that in the money strategy going and you're like, yeah, these stocks can crash by 5-10 points in a day. It doesn't minimize my loss. It eliminates my loss. There's no loss. And it's hard to build a trading strategy where when something goes against you by 5-10 points, it doesn't affect your outcome. In the money trade's been a good trade for us in this sort of tempest that the market has been enduring these last couple of days. We need to get back to the broken wing butterfly ladder, and that is on our goal in our trading room for this week. So we'll be working on that one as well to add another one back in. Our short portfolio, this is just an awesome little short model portfolio that we built inside of my teenage son's account. It's got we're up to $2,800. We started with about $1,100 of buying power, and we've been slowly dollar cost averaging in as we go. He's got about $2,800 in there. We are up 21% so far return in that short portfolio. It's been pretty awesome. And again, I think all of this here points to how important it is to have a broadly diversified approach to your trading. If you are in a trading room and all they offer you is 0 DTEs, first of all, I don't think they're going to put up the numbers we put up. Second of all, you're kind of missing a whole bunch of other opportunities every single day in the marketplace. Our XSP Fly, this has been absolutely a blast to trade. We only put profits in this trade. They're $10 butterflies. We spent $10 on them. So you can see we've spent $70 in buying power this year. That means we've gotten 7 of them. And I think only 2 or maybe 3 have worked, but we've brought in $90 of profit. When you can, first of all, set up a trading strategy where you are not risking any of your principal, and number 2, have a failure rate of like 80-90% and still make money, that's a pretty cool strategy. It's been really, really fun for us. Our asymmetric trading method, that is our asset allocation, passive investing portfolio approach. Absolutely crushed the market in 2021 when the market was doing great. Absolutely crushed the market in 2022 when the market was doing horrible. We are absolutely crushing it right now with the S&P up 1.3% and we're up 10%. I think that's a pretty impressive outperformance of what's going on. So again, I'll give you my little pitch. If you do have a passive, more investment-minded portfolio someplace, and you're not interested in, of course, trading that doesn't make sense to be trading that. And we do believe it makes sense to have investment portfolios and trading portfolios. You should probably check out the ATM program. I think you're going to be very impressed with it. One last thing I'll leave with you folks is an opportunity to come trade live with us for free for 7 days. Come jump into our trading room, hang out with all of our trading members, ask any question that you want. We'd love to converse with you. We'd love to show you the inner workings of our trading sanctum. Go to try0dteforfree.com. You can come hang out with us for free for 7 days. See what we believe is the best trading room, highest value trading room out there today. We do have a double your money back guarantee with the program. We start you off with about 4 hours of training. I do a one-on-one consultation with you to find out what you need most, what you need help with most, what you're looking for, and how we can help you get that. And then we give you a plan of action. And if you follow all of those steps, and at the end of that, you're like, nah, I don't think Scott's right. I don't think this is the most amazing trading room out there. No questions asked. I'll give you double your subscription fee back. It's the strongest guarantee that you got out there. Check it out. Again, if you do have a investment, more passive in nature approach that you're looking for, go to tryastforfree.com. We got a 2-week trial there where you can jump in and see what's happening in our passive asset allocation model. Again, we have just been crushing the market with this. If you want to come scalp with us on Tuesdays and Thursdays, we have a live scalping program. Our goal is to make $500 to $1,000 a day. You can do that very easily by going to tryscalpingnow.com. So, appreciate you guys. Appreciate all the love and support that you give our program. Man, we're pushing up to 13,000 subscribers on my stupid little YouTube channel here. And that's all because of you guys. I appreciate it. So love it if you guys could subscribe if you're not subscribed. And we'll see you guys in the trading room. Take care and have a good trading week.